The thing that gets the markets is not the thing that we know about. It's the thing that surprises the markets. The markets are factoring in all these other things: inflation, stagflation, geopolitics. Market is already factoring in the things that it knows about. The thing it doesn't know about, the things that you and I aren't even paying attention to right now, that's the thing that potentially breaks the market. All right, let's talk about what you need to know before the bell this morning. It's a brand new week, so we finished the week last week, Friday. We finished on a positive note, and again, markets are doing okay here. Absolutely nothing wrong. We're sitting at new all-time highs. The question will be whether or not we get a bit of a pullback here. Markets are very overbought on a short-term basis, very extended, still on that buy signal. So again, at least in the short term, there's not a lot of risk of big downside in the markets. And of course, that's something to certainly, pay attention to. But right now, a correction back towards that 50-day moving average, which is sitting right where the 20-day moving average. Now, the 20-day moving average will probably cross the 50-day in a bullish cross in the next day or so. So, I mean, we're sitting, that junction is right on top of each other right now. But a pullback back towards that support would be very healthy for the markets in the near term. We're overdue for that. Given the overbought condition of the market here, I would certainly expect that we're at least going to either have some consolidation where the market just doesn't go anywhere for a bit, or we do get a little bit of a pullback here. But again, what we're looking for at this moment is this 20-day moving average to cross back above the 50. That's going to provide an elevated level of support for markets. So pullbacks back to the 20-day. We kind of get back to where we were previously from October of last year through basically March, where the 20-day moving average, that rising 20-day moving average, was acting as consistent support for the rally in the markets. That's what you're looking for here. So this 20-day starts to turn back up, which it has. That's bullish. Crosses above the 50, and then as it clears the 50, it becomes new support of that 50-day moving average. So again, markets start to pull back just to the 20-day moving average, doesn't decline to the 50. That's the potential of what we're looking at here. So again, short-term pullbacks, at least in the near term, need that to reduce this overbought condition. But again, there's nothing here at the moment in terms of the markets to be overly concerned about. The markets are certainly not concerned about some of these bigger headline issues that are going on. I know there's lots of reasons to be concerned, like, oh my gosh, what's going on in Iran or in Israel or in Ukraine, or what's happening with inflation, whatever it is. Lots of reasons to be certainly concerned about things, and certainly don't want to dismiss any of those issues. But the markets right now are not worried about that. So our goal here in the near term, we have to make money with markets as markets are rising. Certainly need to pay attention to those bigger event issues that may eventually occur. And the markets will certainly let us know when those become an issue. But as we've always said, remember, the thing that gets the markets is not the thing that we know about. It's the thing that surprises the markets. The markets are factoring in all these other things: inflation, stagflation, geopolitics. Market is already factoring in the things that it knows about. The thing it doesn't know about, the things that you and I aren't even paying attention to right now, that's the thing that potentially breaks the market. We don't know what that is, but right now, the market is doing fine. So again, let's participate. Let's make some money. That's our job. That's what you need to know before the bell.